Hi there, welcome back. If you're new to this channel, then hello, this is Sia, and you're watching Trading Queen. In this video, I will discuss about most popular and important candlestick patterns that indicate an opportunity within a market. Now, if you are a very beginner or do not have much knowledge about basics of candlestick chart, you must watch my previous video where I've discussed it in details for better understanding. You can find it in the I button at top right corner. Well, individual candlesticks form patterns that traders can use to recognize major support and resistance levels. Some provide insight into the balance between buying and selling pressures, while others identify continuation patterns or market and decision before you start trading. It's important to familiarize yourself with the basics of candlestick patterns and how they can inform your decisions. So, without any further ado, let's begin. At first, we will classify these patterns in three categories, based on the indications that they provide. Number 1. Bullish or upward indicating patterns. Number 2. Bearish or downward indicating patterns. And number 3. Trend continuation patterns. Note that this video is focused on a daily chart, where each candlestick denotes a single day's trading. Bullish or upwards indicating patterns may form after a market downtrend and signal a reversal of price movement. They are an indicator for traders to consider opening a long position to profit from any upward trajectory. These patterns are as follows. The hammer candlestick pattern is formed of a short body with a long lower wick and is found at the bottom of a downward trend. A hammer shows that although there were selling pressures during the day, ultimately a strong buying pressure drove the price back up. The color of the body can vary, but green hammers indicate a stronger bull market than red hammers. A similar bullish pattern is the inverted hammer, the only difference being that the upper wick is long, while the lower wick is short. It indicates a buying pressure followed by a selling pressure that was not strong enough to drive the market price down. The inverse hammer suggests that buyers will soon have control of the market. The bullish engulfing pattern is formed of two candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle, though the second day opens lower than the first. The bullish market pushes the price up, culminating in an obvious win for buyers. The piercing line is also a two-stick pattern, made up of a long red candle, followed by a long green candle. There is usually a significant gap down between the first candlestick's closing price and the green candlestick's opening. It indicates a strong buying pressure as the price is pushed up to or above the mid-price of the previous day. The morning star candlestick pattern is considered a sign of hope and a bleak market downtrend. It is a three-stick pattern, one short-bodied candle between a long red and a long green. Traditionally, the star will have no overlap with the longer bodies as the market gaps both on open and closed. It signals that the selling pressure of the first day is subsiding and a bull market is on the horizon. The three white soldiers pattern occurs over 3 days. It consists of 3 consecutive long green or white candles with small wicks, which open and close progressively higher than the previous day. It is a very strong bullish signal. It occurs after a downtrend and shows a steady advance of buying pressure. For strategies, tricks and free VIP signal, join my Telegram channel. Hurry up! VIP seats are limited. And if this video is helpful, please like it, and if you're new to this channel, please subscribe. Okay, let's continue. Bearish candlestick patterns usually form after an uptrend and signal a point of resistance. Heavy pessimism about the market price often causes traders to close their long positions and open a short position to take advantage of the falling price. The hanging man is the bearish equivalent of a hammer. It has the same shape but forms at the end of an uptrend. It indicates that there was a significant sell-off during the day, but that buyers were able to push the price up again. The large sell-off is often seen as an indication that the bulls are losing control of the market. Shooting star is the same shape as the inverted hammer, but is formed in an uptrend. It has a small lower body and a long upper wick. Usually, the market will gap slightly higher on opening and rally to an intraday high before closing at a price just above the open, like a star falling to the ground. A bearish engulfing pattern occurs at the end of an uptrend. The first candle has a small green body that is engulfed by a subsequent long red candle. It signifies a peak or slowdown of price movement and is a sign of an impending market downturn. The lower the second candle goes, the more significant the trend is likely to be. The evening star is a three-candlestick pattern that is the equivalent of the bullish morning star. It is formed of a short candle, sandwiched between a long green candle and a large red candlestick. It indicates the reversal of an uptrend, and is particularly strong when the third candlestick erases the gains of the first candle. The three black cross candlestick pattern comprises of three consecutive long red candles with short or non-existent wicks. Each session opens at a similar price to the previous day, but selling pressures push the price lower and lower with each closed. Traders interpret this pattern as the start of a bearish downtrend, as the sellers have overtaken the buyers during 3 successive trading days. The dark cloud cover candlestick pattern indicates a bearish reversal. A black cloud over the previous day's optimism. It comprises 2 candlesticks. A red candlestick, which opens above the previous green body and closes below its midpoint. It signals that the bears have taken over the session and are pushing the price sharply lower. If the wicks of the candles are short, it suggests that the downtrend was extremely decisive. Sign up in your preferred trading platform with the links provided in video description and get 150% bonus at your first time deposit. Yes, you've heard it right. For continuation candlestick patterns, if a candlestick pattern doesn't indicate a change in market direction, it is what is known as a continuation pattern. These can help traders to identify a period of rest in the market when there is market indecision or neutral price movement. When a market's open and close are almost at the same price point, the candlestick resembles a cross or plus sign. Traders should look out for a short to non-existent body with wicks of varying lengths. This doji's pattern conveys a struggle between buyers and sellers that results in no net gain for either side. A loner doji is neutral signal, but it can be found in reversal patterns such as the bullish morning star or bearish evening star. The spinning top candlestick pattern has a short body centered between wicks of equal length. The pattern indicates indecision in the market, resulting in no meaningful change in price. The bulls sent the price higher, while the bears pushed it low again. Spinning tops are often interpreted as a period of consolidation or rest, following a significant uptrend or downtrend. On its own, the spinning top is a relatively benign signal, but they can be interpreted as a sign of things to come, as it signifies that the current market pressure is losing control. 3 method formation patterns are used to predict the continuation of a current trend, be it bearish or bullish. The bearish pattern is called the falling 3 methods. It is formed of a long red body, followed by 3 small green bodies, and another red body. The green candles are all contained within the range of the bearish bodies. It shows traders that the bulls do not have enough strength to reverse the trend. The opposite is true for the bullish pattern, called the rising three methods candlestick pattern. It comprises of three short red candles, sandwiched within the range of two long greens. The pattern shows traders that despite some selling pressure, buyers are retaining control of the market. The best way to learn reading candlestick chart is practicing how to enter or exit a trade. I personally would suggest you to practice it in demo accounts. Sign up in your preferred trading platform with the links provided in video description and get 150% bonus at your first time deposit. Yes, you've heard it right. And if this video was helpful, please like it, and if you're new to this channel, please subscribe. For strategies, tricks and free VIP signal, join my Telegram channel. Hurry up, VIP seats are limited. This is Sia, signing off for today. See you soon with a brand new profitable video. Good day.